it?
Yeah.
Okay.
Okay. Yeah. Start.
Okay. All right. Okay. So London setup again is the last video probably. We'll do one more session later on London as well. Then we'll come to New York next week. Okay. So London setup, it's a quick revision now. Okay. So I make you quick notes here. What you need to do, the steps which you need to take. Okay.
Yeah, the steps.
All right. So let me write down the steps. Okay. So London setup steps. Okay.
Yes. Yeah.
Okay. Okay. So first of all, step number 1, the asset which we will trade. The asset which we will trade during London setup is GBP, US dollar. Okay. GBP, JPY, Euro,
JPY.
Euro GBP,
GBP CHF.
GBP
Euro.
CHF, Euro GBP, GBP CHF, and then we have others as well, but these are the most volatile one. Okay, GBP CHF, Euro GBP, and then we have Euro US dollar as well. So these are the assets which will be concentrating on Asian on London Open setups. Okay. Number second point: do not trade XAU. Okay. All right.
Do not trade at what?
XAU gold.
Do not. Okay. Yes.
Okay. All right. During London setups. Now the third step is the time frames which we'll use. We use top-down analysis approach. Okay. We come from higher perspective, higher time frame perspective, and define our entries to the and then we go towards a lower time frame for the entry purposes. Okay. So the time frames, it's a top-down analysis approach on 15 minutes. Okay, 15 minutes to 5 minutes. 5 minutes to an entry time frame would be 3 minutes. Okay. All right. So these are the approaches here. Can you see? Hello?
Hello?
Yeah. Can you hear me?
Yeah.
Okay.
Yeah. Let's continue.
Okay, all right. So now we convert it more. The fourth step you need to understand is 15-minute chart. What do we do on 15 minutes chart? We do two things. Number one, we mark Asian high and Asian low. Okay, this is the first step. And then what other things we do? We draw Wyckoff structure. Wyckoff structure. All right. All right. On a 5-minute chart, Wyckoff structure, and after Wyckoff structure, we establish a bias. Okay. What's the bias and background? These things should be identified on.
Right.
Okay. 5-minute chart.
Yeah.
Refinement of Wyckoff structure and confirmation of bias.
Right.
Bias and background. Okay. 3-minute chart.
Right.
3-minute chart would be used for entries, stops, and take profit placement. Okay, these are the steps.
Right.
Yeah. Any confusion with it?
No, nothing. No confusion.
Okay.
I think
All right. So now we will analyze the, let's suppose, Euro GBP. Let's take this example today because we have already analyzed.
One small question. Why not gold? I mean, why do you forbid trading gold?
Because gold has no XAU. Gold. The symbol of gold is, which we trade, is either XAU, AUD, or we have XAU, USD. Okay. We do not have EUR or GBP in common.
GBP. Okay.
Okay.
Right.
As an asset. Okay. So that's why we will not trade gold. Understand? Got it? Okay. And now let's go here, GBP, US dollar. So let me identify another one. GBP, EUR, GBP. Wonder. All right. So EUR, GBP is here. Can you hear me?
Yes, I can.
Okay, all right. So the same structure here, as I told you. Okay. All right. So here we have the same structure here. What are you gonna do? Go to the 15-minute time frame. Okay. And in the 15-minute time frame, we identify the Asian high and Asian low. This is an overnight high.
Right.
So this one is here, is somewhere here is the Asian high on the top here. Okay. You can calculate after, like before you look before like around 2 or 3 o'clock Pakistan time AM and mark your Asian high from here. Okay. All right. Asian high.
Right.
And now we Asian low. Asian low is definitely the lowest point, which is here. This is Asian low. So you mark it down, Asian high, Asian low. High. Okay. You mark it down as Asian low. All right. Once we are marked down, we define the structure. And what you're going to see, you identify the background here. So what do we see here? What do we see here? We are coming back from here.
It's a range. Yeah.
Okay. You identify the previous market as well. Like I suggest you, before Asian region, you select the two, you go for the two market structures, two market changing structure. First structure is this one. Second structure was this one. At least two. Okay. As I've explained you, these two structures. First one, this was an up push, a bullish bias, a push. This is a impulsive impulsive bullish wave.
Mm.
This one is a downtrend. Okay,
Mm.
downtrend, right? Okay. Now what we
Mm.
can establish here.
Right. Mm.
Now we can draw a structure line here. All right, starting from here to here. This one we can identify like this. All right, this structure, this is the first structure. And now once we break down here, we identify several. Okay, very simple.
Yes.
All right.
Okay.
Right.
Mm.
So, and now if we can further refine it, then we can also, first one is this one. You draw from here to here. Second one, you can draw from here to here, this strong channel, right? Now what I do, I suggest you a technique. You select this one and then press Control, select this one. Now move this structure like this.
Yes.
All right. And this one, you can move it further like this, okay? Refine it. All right. So what we have seen here, we have observed an overbought here. So you mark it down. OB, overbought. Okay.
Yes.
All right. I suggest you to come 15 minutes before London Open and then do your draw all of your structures like this. Okay. Then we have an up push here. After up push is that there's a very huge up push. Okay. And then what do we see here? We see an Asian range developing. All right. And then after this upward push, we have a small structure here as well. You can extend the line.
Yes.
All right.
Yes.
All right. So here we can see a huge volume coming up here on this part. You can see huge volume coming up here. And then there's exhaustion volume as well. So we can say it's a buying climax here. All right. Here we have a buying climax.
Okay, I think we should first draw the trend lines. Uptrend channel.
You cannot draw uptrend channel over here.
Lines.
That's a problem. It's a very straight push here.
Yeah, that is the problem.
It's a very straight push here. You cannot draw a trend channel like this. If you draw like this, it would be somewhere like this. These 2 points joining, right? Between these 2 points. So you can identify. Sorry?
SOT, right? SOT.
Yeah,
SOT, shortening of the thrust.
It's a short. Yeah, it's a kind of shortening of thrust over here. All right. If you draw it, whether you draw it or not, like it's not necessary. But yes, you can draw for your clarification. All right. Okay. We have overbought here, and overbought also act as a spring. All right. And now here as well, if you draw here as a structure, we have SOT forming here. So this is a spring of this reverse is a trend line, right? This SOT is SOT here.
Yes. Yes.
All right. All right. This is OB and spring. After OB and spring, overbought and spring, we have a push up. And now we have this, you can draw this trend line to trend channel here. Okay. You can identify here. That's an overbought right over here.
Yes.
All right. And this overbought.
Yes.
You can easily
check
it out. Yeah. That's an overbought here.
Preliminary supply.
OB. Just overbought. This one should be oversold, not overbought. Sorry. Oversold.
Yeah, that one should be yes. Yeah. OS. Yes.
Yeah. Okay. And now we have done the structure AR. Now we have a secondary test here. Okay. As I told you, the secondary test did not reach this area, so we can draw another line here, small line representing. Okay. So this hole will become an area. This hole will become an area now.
Selling zone.
Yeah, this kind of selling zone.
Here. Right?
Yes.
Selling.
Okay. All right. So we have Asian high, Asian low as well marked here. All right. So what are you going to do? We go to the 5-minute chart now and further refine our entries. Okay. Now you see the structure is very clear. Can you see?
Yes.
SOT. Okay.
Yes.
Yes. This is AR. This is buying climax. Secondary test. Okay. And now the whole structure is very, very clear. We are within the range. So you do not need to draw any kind of structure here. Okay. And now
Yes.
we are waiting for the London Open, right? London Open was here, right over here on this point. Okay.
Yes. Yes.
All right. So London Open was right over here. Okay. So here we go to the 3-minute chart. We do not have to do any kind of refinement. Okay. It's all okay. Okay. So here, once we are here, you have London Open. So the London Open was right over here, right over this point. So what do we notice?
Yes.
We notice that during the Asian low, within the Asian low, we observe the minor spring here. You see, of this AR. This is first spring. This is test of spring, and this is second spring, right? And London
Yes.
Open was
Yes.
right over
Yes.
here.
Yes.
London Open is the test of this spring. So this is AR.
I think we should put a vertical line at London Open.
Okay, you can put. Vertical line.
Yeah, this one. Yes.
Okay, this is London Open.
Yeah. Yeah.
All right. Okay. And now what do we see within the structure? One is coming down. We got a spring as well. And now, before London Open, the London Open is right over here. What do we see more? Can you see the structure of lower lows before you make a spring? We can further define it. It's not necessary, but it will help your analysis, right? It will make your structure more clear now. And now we see little violation here. Okay. So this one is very, very clear spring. Okay. Spring plus oversold. So we can say this one is spring. This one is test of spring or test of spring. All right. Here, this one is oversold plus spring.
Another spring.
Although we have a major sign of weakness in the background. So it means we cannot hold more than this. We must exit our position on this point if we are taking the trade on London Open. Do you understand?
Yes.
Because we have a sign of weakness in the background. We have OB, blind climax, secondary test. So yeah. So we have a sign of weakness. So our long-term bias
is downward, is bearish.
Bearish. Short-term
is
bullish. Understand? Now we have determined we have refined everything now. All right. So now once we see overbought and spring here, what do we see? Our London Open was right over here at this point. Okay. At this London Open, you can wait for another one for the confirmation. This is a huge, okay. And then we have a kind of a no demand here. No supply here.
No
all right.
Supply.
Yeah, no supply here. You can enter your position right over here, or you can enter after London Open as well.
I think. Yeah, okay. I think we can even enter at London Open. That's also fine, isn't it? That's also fine. We can even enter at London
because
Open.
by
Yeah,
now
that's
before
fine.
London Open you would have identified all the structure, right? So at London Open you can directly enter. Yes, you can enter at London
and
Open.
Where is your stop? Where is your stop?
My stop loss would be here.
Just below, yes.
Yeah.
Oh, right. It's I think it's too big. It's too big,
yeah,
isn't it?
So if it's too big, what did I tell you? You can take the 50% of it, right? All right. So 50% right would be right over here. Right would be here. You can use a fib here easily and determine your optimal. You have to make you have to think about it whether your stop loss is huge or not. So 50%, we are exactly at a 50% right over here. Okay. So I just made a rough idea. I did not have to draw the fib. Okay. So I just had a rough idea. Here would be the 50%. Okay. 50% would be here, somewhere here. All right. So here we have a stop loss here, few pips below it. All right. And then where would be our take profit? Of course, our take profit would be
at the selling zone.
Whether you can take an Asian high as a first target, or you can take as a or you can take this as a, what to say, this selling zone,
the upper selling zone.
Upper selling zone. So if you go for the Asian high, because this is Asian high over here, if you go for the Asian high, you make how much? You make 2.83.
It will be achieved very soon.
Yeah, so it's okay. All right, it's more than enough for you. And if you go for the
or we can even book the partial profits at Asian high and let it run for the selling zone.
Yeah.
Right?
Yeah. So you can close 50% over here, and then let the rest 50% run over here, this level. Okay.
Yes.
Any problem?
Right. Yeah. No, I think it's clear. It's pretty clear.
Yeah. Okay. Or if you don't want to clear, if you're okay with achieving, if you're okay with achieving this, if you're okay with achieving 2.8 something, and so it's okay. It's also good. It's also good enough to achieve your daily target of 2 hours, because you are targeting 2 hours per day and 10 hours per in 5 days, 20 hours in, so 2 hours per day means how many days? So 20 days is 40 hours. So it's more than enough, if you consistently go through it. So some of the days you will be break even. Some of the days, some of the days you have one losing trade and one winning trade. So your R will be 1 hour. Some of the days your R will be 2 hours. So your average R will be 3 hours per day. So you can see 3. So your average monthly gain will be 30 hours, 30%. It's quite good. Okay. All right. So that's what you can do. As I told you, you can close around. So what I suggest you, if you're going for this trade, I would close 75% of my position over here. 75% on the first target. This is my recommendation. 75. If you want to run it longer. Okay. 75% close over here, and let the rest 25% run to this point. 75% close here, 25% close, rest 25% close here. Okay, that's it.
It's selling zone.
Yes. And now, once you have identified this structure and you can get another opportunity by just marking. Once the London established, right? You can draw this. Now you have already seen the London. You can draw these two. Okay, join these 2 points. And now you can just, once your trade violate this and this, this point, once your trend violate this point, okay, this point and this point, what you can do, you can create an alert over this level, right over here. You can create and add an alert, and the alert level is adjusted right over here. Okay, you can edit it. After editing the alert, you can crossing up. You can use crossing up only once. You can, okay, select the time as well, everything. And then once your market cross this level, you will be alerted, and then you can enter. You will be ready to enter another position.
Right.
So yeah, this is the technique which you can go for another second trade. Okay, so 25% of this. So how much will you achieve if you close here as a 2.89%? This one is rest 6.17. So 25% of 6.17.
Let's say roughly 25% of 6%.
25.
That will be 1.5. 1.5%.
Okay, wait. 25 divided by, sorry, 25% of, why it's giving 0? 25%.
6.
I don't know why it's giving 0. 25 divided by 100,
okay,
multiply by,
it's 1.5. Yeah.
So 1.5, right?
It's 1.5.
So you make 1.5 on this here,
Yeah.
1.5 R plus,
and already made 2.5, 2.8.
and then we have 75 divided by 100 multiply by 2.8
times
2.1. So you make 2.1 here.
2.1.
So 2.1
so
plus
it's roughly 3.5.
3 points. Roughly, you can say after commission spreads and all those things, 3.5 R. I think that's a pretty good trade.
Yeah, excellent. Yeah,
it's a pretty good trade, right? And you have another opportunity to go long multiple times. One is here, you go here, and once your position is closed, you can re-enter right over here as well. Because if you, okay, let's suppose where you can re-enter. If I extend this all, all right. If we extend this channel here, so we have a multiple re-entry, and you can see this a shakeout here, right? Shakeout here, observed over here.
Shakeout on
this one, and then here as well. If we draw a trend line, straight trend line, we see here effort versus no result. This is another entry. So you have this entry here as well. You can go and enter for this. And here, if we draw this, connect these 2 points here and here, if we draw the trend line right here, we will see that it's exactly we have the effort versus no result on this part, right? Effort versus no result, right? So we have 3 entries here. Third entry, once we break this high, once we break this high, right over here, you can see. Okay, you can see that we have a rising volume and we have declining volume on this part. If we draw this mini channel here as well, okay, this is okay. And you can see here, this again, another effort versus no result bar plus no demand as well. This is another entry.
No supply.
Yeah, just another entry. Supply. So we are stop loss would be on the last high low and then go up. Okay, so see, we have multiple entries. Okay, last high, this one, go up. This one. Our last low is this one. This one low, we place the stops below it, go up. So you see, we have multiple entries.
Yes.
If you miss the London entry, it doesn't matter. You will get a re-entry opportunity. Do you understand? Yeah.
Yes.
So you understand the whole structure, how I draw the structure and how I enter.
Yes.
Okay.
Yes, I understand.
Okay, all right. Now let's remove this alert. Remove. Okay. We go here. So I think we considered right over here. Exactly same principles will be followed here as well. We mark the London.
Yes.
For example, if we are going for the London session, oh sorry, New York session, you do the same. Asian low, Asian high. Where would you see Asian? Asian open was here, right over here. So low of this could be where it started. Asian low, sorry, London low. London high. London high is, we have no London high, all right, because London session is still ongoing, right? So we only have the London low. Okay, this is the difference.
Right.
During London session, during the New York session, we do not have the London high because the London session and the New York session has an overlap. You got it?
Yes.
That's why I said
Yes.
that
Yes.
London
Yes.
session, London open entry is a little bit different from the New York open.
Okay.
That's the reason. The reason is that during New York open, we don't have London high. Why? The answer is because London,
There is overlap.
yeah. London session is in progress when the New York opens.
Right.
Any confusion?
No confusion. And I think this difference is very clear with regards to Asian Open, because
Yes.
Asian session is first closed and then London is open.
Yes,
right?
yes. That's why I said that we have a bit different setup. We have a bit different setup from the London Open setup. During the New York setup, during the New York Open setup, okay, New York Open setup is bit different from the London Open setup. I think you understand now.
Right.
All right. Okay. Now
So, yeah,
let's
get it.
go back here. So we have this London low. Okay. All right. London low is still ongoing. Now we have, yeah, now we have London. So the New York Open was here. But again, the thing is, this is not a suitable asset for New York, because the New York asset should be gold is a very good asset for New York. Do you understand? Because during the New York Open, we should have, but there will be volatility. The thing is, you can trade Euro GBP because of an overlap between London setup, between London and New York. So you can also trade the GBP pairs. Do you understand? During London,
there should be, I think,
but more like the manipulation will occur during
there should
the
be one
what I'm saying,
dollar in the dollar assets, right?
Manipulation will occur only on those assets which has US dollar. You got it? Yeah, because in Wyckoff terms, because in Wyckoff method, we have to identify the manipulation. So manipulation will only occur where there is a US dollar. So we are only interested in those assets which have US dollar. Do you understand?
Yeah, I do understand. Yeah.
Okay, all right. Now let's go for the previous one, London Open, which was here. Even if you are here, right over here on this, you can still mark the London Open like this with a vertical line. For example, you don't have this data. You don't have this data. You are right over here, and you can still mark like this. Okay, this is London Open. Do you understand? Hello. Hello. Okay. All right. So what do we see here? First of all, what did I say? Mark the Asian high and Asian low. Mark the Asian high. Asian high should be after 2 o'clock, somewhere here, right over here. So I will definitely mark the Asian high from here. You can say from this point, because after 2 o'clock we will see the Asian session. So here, somewhere over here is the Asian high, right? Hello, can you hear me? Yeah. And how about Asian low? Yeah, I'm here. Asian low is right over here. After 10:30, this is 10:30. This is where 10:30 occurred. So this is the Asian low. Can you hear me?
Hello.
Yeah, I'm here.
Yeah, go ahead.
Okay.
Yes, I can.
So we have Asian high, Asian low, because the Asian market closed at around 10:30 Pakistan time, right? So our Asian low is this one. Asian opens at 2 o'clock, which was here. Okay. So the highest point of the Asian market was this one. So this is the Asian high, this is Asian low. Simple, right? Before the Asian high, you can see you can see this part and the previous one. I told you, first of all is this major part, then we have this phase, the downward phase. All right. So we can draw the Wyckoff structure right over here from this point to this point. So first Wyckoff structure would be drawn like here. We have ranging market. All right. Okay, this is a Wyckoff structure. The second one would be hello. Yeah. Hello. The second one would be this one. Okay. Third one is this one. All right. So what we can see, we have a bearish sentiment, bearish. Okay. Okay. There was a little bit slight oversold, but it did not succeed it. Okay. All right. So this market is, because this is an overnight market. This is an overnight market, so it will be slow. Hello.
Yeah, that's right.
That's a slow market. That's an overnight market.
Yeah.
There's an overnight market.
Because of overnight, yes.
All right.
Very slow and very low volume.
Yes. And we are coming from where? And here on the top, if you can identify another one, here you can see that we are coming out of this range. If you can identify. Okay. We break out here. And we have a strong bullish move to the upside. And now what do we have here? Okay.
Oversold.
Right. Yeah. We don't have an oversold, but we have a buying climax here. You can see a huge buying climax here.
Yes.
One shot. Okay. And if you can draw this, because
so it's a distribution.
Yeah. So you don't have to draw multiple channels. You just have to draw the important ones. Okay. Now we have identified those. So this is distribution coming out of distribution, redistribution coming out, and then we have a trading range, and then we broke down. Then Asian range start here during the Asian market breakdown, and then we have what ranging market here. All right. Okay. Now we go to the 5-minute chart, and see if we can clarify more over here. So after Asian low, what did you observe? Yeah, after Asian low. So we have our main factor here is the bearish, right? So major.
Yes.
Major. So major bias
is
bearish. You can understand from the multiple trend analysis, right? Okay. Minor bias. We are not yet sure what is the minor bias. Let's see what is the minor bias. Minor bias is before the Asian, before the London Open. Now what do we see here? We have a rally, rally. Now we can easily draw this like this, right? All right. So what do we see here? We have a first violation, second violation. Yeah. Again, multiple distribution. So the high of this one, because this one, the overbought completes. The overbought is completed once. You see, once we come down this trading range, which is right over here. So this overbought was completed right over here. This overbought was completed right over here. So this is the actual overbought. OB plus buying climax. Why? Why this one? Why not this one? Why not this one? Because we need a bearish close down this trend channel, this trend line. Do you understand? A bearish close, which is closing on the lows. It should close on the lows. Then we can say that it's a complete overbought. Okay. And after overbought, what do we see? What do we see? Overbought, automatic. Again, you know that before London Open. Automatic reaction. And now the London Open comes right at the test of this overbought. Okay. But this, now you see this London Open. Red comes over. This is London Open. Now we go to the 3-minute chart. Further refine it. You will understand this structure more on a 3-minute chart. Now you see. This was the overbought achieved on the 5-minute chart. Okay.
Right.
You understand? Yeah. We have a slight over, you see, shortening of the thrust here as well. SOT. Okay. So we have SOT here as well. This all was, sorry.
So would you short at London Open? This.
Let's see what the situation occurs. London Open was right over here. We have an AR right over here. So we can draw this channel AR. Let's mark this trading range with
okay,
black.
so I think we should again put the vertical line at London Open.
Okay, this is London Open.
Yes.
Now we are in a trading range.
Now
if you see, we are in a trading range. All right. We are overbought. OB plus BC. We have shortening of the thrust. So here we see shortening of the thrust plus OB and OC. This is a very strong sign of weakness. Do you understand? These two situations combines. We have OB and BC. We have shortening of the thrust. This is a very strong signal. So how about our minor background? Minor bias is also bearish before London Open.
Okay.
So now we have a very clear idea what can we do, right? So this is the secondary test. Now this one is we have to wait for the test over of this OB. So London Open was here, okay, with a huge volume, and now we have to wait until we test this, this, right? Okay. Now the test came right over here at this point. Okay, at this point. And what do we see? This is test here, but that's a very normal bar. And this one is effort versus no result. Do you agree? This bar is effort versus no result.
Yes.
You see the volume. Similar bar, similar spread, closing on the mid and high volume. So it's effort versus no result. This is an entry to go short.
I think Unip, I would have entered on the previous bar.
This one?
And would have been stopped out. Yes.
No, why would you enter on the previous bar? What is the reasoning behind entering the previous bar? Is this, you see, you have to enter.
Yeah, this one.
You have to enter on the sign of strength or sign of weakness. Okay, what are the sign of, okay, what are the VSA signs? Okay, you know about VSA, like we can enter on no demand.
Wait, because
we can enter on
no demand. Yeah, so this one
thrust.
Yes, so don't you think this is no demand?
Which one?
The bar which I am identifying. Yeah.
This one?
Yes.
How is no demand?
Oh no, it's not no demand.
It is.
Yeah, it's not no demand.
There is no sign of weakness. There is no sign of weakness on this bar. Okay. It's just a normal bar. It's a decrease in spread.
Yeah.
The spread is lower than this bar and the volume is lower as well. So there is nothing. So there is nothing unique about this bar. Do you understand? But how about this bar? This test is actual. So what I look for, I look for no demand, effort versus no result, up thrust. Okay. All right. I look for this bar to enter short.
Right.
Okay. So this one is actually bag holding. No, sorry. End of rising market, or you can say effort versus no. This is end of rising market.
Yeah. End of rising market, which is actually the reverse of bag holding. Yeah.
Yes. Got it.
Yeah. So it's the bearish.
So this is a signal. This is a signal to go short. Remember, you have to only short on the right location. Plus, the entries bar should be the entry bar should be like no demand, effort versus no result bars, or we have the what to say, up thrust or spring. Okay, these type of bars. Do you understand?
Yeah.
When you don't see these kinds of bar, you should not enter.
Right.
Keep this in mind.
Yes.
Okay. And now you know our AR level could be our this one SL and our how about our, because we don't have any major high here. You see when was a major high? This was a major high right over here. Here. So if you see the last high before, last high before this bar was actually right over here. This area. This area. This area was the last. This was exactly same high like this. So you can place little bit above here at this point, SL. Okay, a little bit above this bar. So this is our SL.
Right.
This is our SL. And now we have an entry point here. So
but this will be but this will be, I think, very big SL, right?
Sorry? What do you say?
Yeah. It's okay. It's okay. It's right. It's right. Yeah.
Do you understand?
I think it's good. Yeah.
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 So the
I
SL, why do I place
fine.
SL over here? Because first of all, we need to find the last high. Where's the last high? The last high before this high. This entry bar's high, last high would be somewhere. But this one here, right over here, is equal actually. If you draw this line, these all are equal highs. So our stop loss would go right above the equal highs. Do you understand? This is logic. Because the market could come to this point and take us out. So we need to place stop loss a little bit higher. Okay.
Right.
That's it. So this is a 3.15. Okay, 3.15. You can do the same. You can close all of the positions. All right. And rest of the position you can close on the Asian low. Do you understand? So you can close 75% right over here on this. If you want, you can close all full position as well, but it's all up to you. 75% of 75% here. Okay. And then rest 25% position close here. Okay. So let's see how much we make here at this point. Okay. This one is 6.5. So 25 calculator. 25 divided by 100 multiply by how much?
It will be around 1.6. 1.6 it will be, yeah.
Around
1.6.
6.5. Sorry. 25 divided by
6.15.
6.5. 25 divided by 100 multiply by, let's give it 6 because
times.
Let's give it 6 because we are also taking spreads and commission into. Okay. There are spreads and commission as well.
Okay.
So 1.5. So 1.5 are here.
1.5, yeah.
Okay. 0.5 R. So you see, I have a very structured approach to trade, right? To trading, very, very structured. All right. And this one, if you close right over there here, 75%, that's 3.15. So let's take it 3. So let's take it 3. Let's take it 3. Sorry, 3
75%
multiply by 75 divided by 100. 2.25.
2.25.
So 2.25 plus 1.5. The answer would be 3.75 R. So that's a pretty much good.
3.75.
3.75 R.
So you are done for the day.
Yes. Or if you close right over here, you get 3 R. You pull out 0.75 R more because of this. Okay. All right. So if you close right over here, it's also fine. If you close at the, because the next level after this AR, the next level is the Asian low. Do you agree? And you see after Asian low, there is a struggle between it. And then the market goes down again. So these are the key levels here, which you should target. That's it. This one and this one. Any confusion?
No confusion.
Okay. So
everything is clear now.
Yeah. So entries, I tell you, the entries here. Another point. Entries should be SOS or SOW bars. Okay. You got it?
Right.
Can you tell me what are the SOS
so test
bars?
bars.
SOS.
Test
Yeah,
bars.
test bar.
Yes.
SOS bars. You can see what are the SOS bars. Sign of strength bars. Sign of strength bars are spring.
So it's no supply.
Test of spring.
Spring, no supply.
No supply.
Bag holding.
You can say effort versus no result instead of bag holding. Effort versus EVNR. We can say EVNR. Effort versus no result. And then what do we have now? The other one, we have LPS, last point of support.
Bag holding.
Bag holding is same as EVNR, right? Yeah, it's similar. So bag holding comes under the category of EVNR. Okay. Okay. And these kinds of tests should come in the right location. Okay. They should come on the top testing areas. Okay. SOS bars. So this is LPS, and then the last one you can say hidden spring. Okay, these are the entry bars, and they should background
previous
strength areas.
Background SOS. Yeah. Background SOS.
Background strength areas, you can say.
Okay.
Background SOS. Okay. Background SOS. You got it? Now, SOW bar.
Got it. Yes.
What are they? Upthrust. Test of upthrust.
Upthrust. Hidden upthrust.
UTAD. Upthrust after distribution.
Test of UT.
Okay. Test of upthrust. Test of UTAD. Okay. Then we have no demand.
Test of UTAD.
After no demand, we can say EVNR, effort versus no
End
result, or rise of market, end of rising market, you can say. Okay. All right. Okay. EVNR. After EVNR, we have hidden upthrust.
Yes.
All right. Yeah. These are the areas. Okay.
Yes. Got it.
And then we have the intermediate SOS. What are the intermediate SOS? Sign of strength. 2-bar reversal. Okay. 2-bar bullish reversals. 2 bars.
Key reverse.
Bullish reversal and key reversal. These are the intermediate. Yeah, and then we have key reversals. So these are the intermediate. And how about the intermediate SOW?
But I think we cannot enter 2-bar top reversal. 2-bar top reversal.
No, I would not enter.
Yeah,
for the 2-bar
reversal.
top reversals should be tested. You see, they can be tested by no demand or effort versus no result. Do you understand? These intermediate SOS, okay, this one should be tested. Okay, here, no test required.
Right.
Okay.
Yeah, because these are the tests.
Yeah.
Themselves.
Yeah, because key reversal is made from, like, its key reversal has two quantities. First of all, it has intermediate SOS property, and it is a test of itself. It is itself a test. Do you understand? Do you understand?
Yes, yes.
Because it is.
Yes, I understand. Yes.
A test itself. Okay.
Yes.
Now, how about
intermediate? So the idea is that we have to enter. So the idea is that we have to enter on the test itself, not some intermediate sign of strength, right?
If you have intermediate sign of strength, if you have a 2-bar reversal, for example, you have a background strength, you have a background strength, for example, buying climax. After buying climax, you see on the testing 2-bar top reversal. So 2-bar top reversal should be tested. Do you understand?
Yes. That's a
2-bar
very
top
important
reversal.
idea.
Yeah, 2-bar top reversal is the intermediate sign. And if we see the key reversal, upward key reversal, it requires no test. Okay.
I think yes.
Okay. Here as well, if we have 2-bar bottom reversal, it should be tested. Do you understand? If we have key
yes,
reversal, no test required. I will. This webinar is already recorded. Okay, so don't worry about it. Okay. No test required. Do you understand? This is all. Any confusion so far? So these are the entries. Remember that these are the entries. Okay.
Yeah, no confusion so far.
These are the entries. Intermediate bar depends. If it's a 2-bar top reversal, it should be tested. If it's a key reversal, no test is required. If it's 2-bar bottom reversal, it should be tested. If it is key reversal, no test required. Do you understand?
No test required. Yeah.
Yes. Hello.
Yeah. Yeah. Fully understand the idea.
That's good. Okay. For example, let me see the 2-bar top reversal. If I can see here, this one over here, it's a 2-bar top bottom reversal, and testing was carried
bottom
right
reversal,
over here. Yeah, testing was carried right over here.
Yes.
You understand? Now let's see. That's a key reversal right over here. Key reversal, no test required. And after this, you see the market goes up.
Yes.
Now let's see here.
Right.
Here at this point, this one is a hidden. This one is a hidden spring. Okay. Hidden spring, right?
Yes.
First no result plus hidden spring, no test required. Okay. Here, this is a key reversal. This is key reversal here, but the volume is not much high. Let me show you more. Here, 2-bar bottom reversal, so test is required. The test came right over here at this point. Do you understand? 2-bar top reversal.
Yeah, I understand.
2-bar bottom reversal. And then test is required over here. That's a no demand, no supply. Up.
Yes.
That's a kind of key reversal. These two bars together, they formed a key reversal. So you can enter right away without any test. Place your stop loss and the market goes up. Right?
Right.
Okay, I show you more. This is 2-bar reversal. 2-bar reversal. Test is required. Here you can see test.
Yes.
No demand here. This one is a test. So this one is tested over this area. Do you understand?
Yes.
Yeah. Yes. And now we have, let's find more. Two-bar top reversal right over here, or this point you can see. 2-bar top reversal. And now testing. Okay, you see?
It's required.
Yeah, testing is required. It's like a not big deal, but it's combined when it's combined with this one, it's a bearish. And we can go down right over here. We can enter right over here. Understand? Right?
Yes, okay. I fully understand.
Now this is already 1 a.m. So that's why the market is very, very choppy. Because it's already 1 a.m. at this time. Right? Okay, now let me see here. If you can see more example. Here, you can see 2-bar top, 2-bar bottom reversal. See, we have a background strength, 2-bar bottom reversal. So what happened here? What happened here? Test is required right over here. But again, we do not have any sufficient. Okay, we do not have any sufficient sign here as well. Here
movement.
You can see, yeah.
Hmm.
All right. 2
The
bar
market
bottom
is
reversal testing.
not.
Yes. You got it? Because when the test was required over here, when the test was required over this level, then you see already that the price is already coming down right over here. Right? Then you can just draw this line. All right. Yeah. So once we have a breakdown of this level again, we know. Okay. So if we enter right over here, our highest potential would be the last time. All right. Okay. Now we see more. Hello. Hello.
Right. Yeah.
Yeah. Yeah. So here you can find more as well. Here you have a kind of strength here, 2 bar reversal here. You can see right over here. We have some no demand here. Okay. We have a major weakness, but now we are coming. If we draw this line here, you can show that we are still in the weak background. Okay.
Right.
There is strength. So okay. So if you're gonna go long, what we draw, this is the AR, and you see this is what 2 bar top reversal. Okay, this is not a no demand. Why is it not a no demand? Because spreads are higher. The spread of this bar is higher than this one, and volume is lower. So this is not any kind of weakness or strength, but it is a kind of 2 bar reversal. So what I said, this 2 bar reversal should be tested. It was tested with no demand right over here. A perfect one. Do you understand?
Right.
Yeah.
Should be tested.
Yeah.
Requires test.
And this is our high, so this is our position close right away. And we have a serious background weakness, you know. Our major background is bearish. Our minor background is bullish. All right. And this one as well. This one is also what? This one is what? This bar. This bar is weakness or strength?
It is. I think it is EVR. Effort versus no result, right?
It's a huge volume.
The big one,
it has, and it has a big spread.
So it's a test.
So we cannot call it as a EVR, EVNR. Okay. So
yeah, the bar.
Yeah, but you can say one thing, that it's appearing on near the top, okay, where there's already a weakness. So and it's closing off the lows. You can see.
Right.
And then after that we have a bearish reaction. So obviously this is what? This is major sign of strength, major sign of weakness, major sign of weakness. Do you understand? Okay. So we call it as buying climax within a range. Do you agree? Hello? Hello, do you agree? Hello? Okay, okay. That's it. Any questions so far? Okay, so this is buying climbing within the range. All right, so I'm done with this all. And now let's go for another one. 15 minutes. Hello? Hello?
Yeah, hello.
Yeah. So I think you have got all the point now. I have explained you 3 structure now. You should be able to do it now, right?
Yes, I think it's
if you have any question, you can ask me right now. Okay, I have also cleared you about the entry points. What entry points are required,
yes.
And you can re-watch this video again to get like you. If you have any confusion, you can easily get a clarification. Okay.
Yes.
So we conclude this webinar, or should you want more chatting?
I think we can conclude it now.
Okay, okay, all right. So
Yeah.
I will
So I will
yeah,
watch this
recording as well. Okay, all right.
Okay.
So all of these points are clear.
Oh.
Entries are clear.
All the points are
Okay.
clear.
You do not take anything. You should not enter on any bar which does not have a sign of strength or sign of weakness. Remember that. Okay. So these are the sign of strength and sign of weakness bar. These are sign of strength bar. Spring, test of spring, no supply, EVNR, last point of support, and then we have hidden spring. Okay. They should test the background sign of strength. Then we have upthrust, test of F thrust, hidden upthrust. We also have LPSY. Okay. And what they should test? They should test what?
The background conditions, the background area
SOW.
of strength or weakness.
Background. No, I'm talking about the SOW bar. So they should test the background
so
SOW.
Then obviously
it should
SOW.
Background SOW. Okay. SOW bar should test the background SOW. Do you remember that? And if we have the
Background
intermediate
SOW,
bar, if you have the intermediate bar, let's suppose 2-bar reversal followed after the, for example, we have a background, weakness. After background weakness, we observe 2-bar top reversal. It should be tested. Remember that. Okay. And if we have a key reversal, it should, there is then no test is required. Similarly, if we have the background weakness, if we have the weakness in the background, and after weakness in the background, we observe 2-bar bottom reversal, it should be tested. Okay.
Right.
It should be tested with the which bars? These bars. Okay.
Right.
It should be tested with these bars. Okay. If you have a key reversal, it does not require any test. So we have three kinds of. We have three kinds of. So we have the intermediate sign of strength, intermediate sign of weakness. These two. Okay. Then we have the minor sign of strength, minor
strength
sign
and
of,
minor signs of
so minor is minus is represented by small m. Okay, small m. Okay. Background strength and background weakness is identified by M, capital M, which is major sign of weakness. Okay. M, capital M, major sign of strength. Do you understand? That's why once if you have read the if you have read that Wyckoff methodology in depth, you will see this MS MSOS and major sign of strength. Do you remember?
Yeah, I've seen that.
I think it is written by Ruben. Yeah.
So I think an example of background sign of strength is the selling climax, from where you will
selling
see
climax,
an automatic rally.
shortening of the thrust, overbought.
Is a background.
Yeah, sorry, selling climax, oversold. Do you understand? Oversold, selling climax, selling climax, oversold, and then we have what to say?
LPS,
shortening of the thrust, shortening of the thrust.
All these are the background.
Shortening of the thrust. Do you understand?
Yeah.
Shortening of the thrust. SOT.
Yeah, I fully understand.
Yeah.
Yes.
These are the background
fully
strength.
understand.
Yeah. Or background strength is also, and we have one major, which I saw, JAC, jump across the creek. Jump across the creek. So if we say major,
is a major one.
Major, or we can say MSOS, MSOS, or background strength.
SOS.
Background strength or background SOS are, let's suppose, oversold. Okay. SOT.
Oversold.
Via
SOT.
reverse trend line. Okay. SOT via
RUTL.
reverse trend line.
RUTL.
Yeah, reverse user trend line. RUTL. Okay. And then we have what to say, a selling climax. Okay. And the last one is,
I think automatic rally AR itself is also a major sign of strength. Automatic rally.
Automatic rally is just a confirmation of selling climax. You will only identify selling climax once you have automatic rally, right?
Okay.
Yeah, do you understand?
So and I think jump across the creek.
Yeah,
Jump
jump
across the
across the
creek
creek is the last one.
and
JAC,
Jack
jump across the creek.
and Buick back up to the edge of the
No,
creek.
back up to the creek is actually minor sign of strength. It's a confirmation. It's a testing, because back up to the creek is actually the testing of this one. We call it as LPS. You can call LPS back up to the creek, whatever you call, or LPSY. Do you understand?
Yeah.
So LPS is last point of support. It breaks down last point of support. So it one is LPS is BUEC. Okay. And LPSY is RBI, rally back to the ice. Do you understand?
RBI, rally back to ice.
Yeah. So selling climate. Now, what do we have as a major sign of weakness or background SOW?
I think there will be BC, buying climax.
We have first of all SOT to the downside.
Downside.
Via
downside.
RUTL. Okay, here SOT to SOT to the
that
downside.
Will be upside and
this one was the downside. This one would be upside.
This one upside. Yes.
Okay,
upside.
And then we have overbought, buying climax, and then last one is FTI. These are the major sign of strength.
Yeah.
Do you understand?
Fall through ice. Yes.
Yeah. Any problem?
No problem. I think everything is clear.
This is all. I think, yeah. Now you can practice this all. You can follow this structure, and you can watch this video again and try to understand like how I draw the semantics and how I identify Asian high, Asian low, and what are my take profit targets. I think I've explained in this video already. So you can try it, practice it, and then you can test it on FTMO trial account, and then let me know the results. Okay.
Yes, of course.
Okay. So let's conclude the webinar now. Okay. Bye-bye. I will send you the recording of this webinar shortly. Okay.
Yes, and also the third video from last night.
Yeah. That one is already done. That one.
3 videos.
That one is already here. This one.
Okay. So
I will
2 videos. Okay.
Yesterday webinar part 3. Part 2 is I've already given you.
Yes.
This one is part 3.
Yeah. Yes.
Okay. I will
upload it on YouTube. Let's call this Sunday webinar.
This one? Yeah, I will call it as Sunday webinar. Yeah, that's okay. So once I close this video, it will automatically convert it. Okay. All right.
It will be recorded.
Yeah. Okay.
Yeah.
Then bye-bye.
Yeah.
Bye-bye.
Okay. Thank you. Bye-bye.